Good morning, traders. Sorry about the delayed start here. Is it me or there's a massive echo? Hang on 1 second. Okay. Thanks for joining me. This is for another Trader Bite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. So, overall, what's the market feeling and doing this morning? We are allocating to safety this morning, except for the NASDAQ up 1 point. Not much movement from yesterday. The overnight range in the U.S. indices is pretty tight. Volume is also pretty tight, as you would expect, dead in the middle of the summer. Actually, volume is okay. It's the range that's not entirely there. Gold's leading the pack up 7.5 points, 0.62%, followed by crude. Crude on September WTI is trading at 68.77, up 25 cents or 0.38%. So, and that's that. As far as what we're looking for today, my calendar did not update. Let's take a look at what we're looking for today, huh? Today has been rough start. Gonna need to take it easy today. New home sales at 10, pretty low importance. We also have crude oil inventories at 10:30. Keep an eye out for that. Nothing else on deck that's a major concern at the moment. Of course, we're in the middle of earnings season, so you need to, especially if you're trading equities, you need to be aware of what's coming out. Tons and tons of calendars out there. Check that out. Let's take a look at what we expected yesterday versus what we got. Here we go. So the primary scenario for yesterday, we were gapping up at about 28.23 for the open, and the expectation is we would push up towards 27, fail, move back, and move back towards 28.18 and a quarter, 28.17 and a quarter, and leave a gap zone open for future generations. So that's this green box right here, and then for it to turn back around and start moving towards 34. That did not happen at all. The secondary scenario is an open auction that drops back down into 28.18 and just goes sideways for most of the session. Did not happen. Tertiary, the third scenario, is a push up to 27.75, open test drive down that pushes us into the prior day's high, pullback, and then continuation into the prior day's range, targeting 28.0775. That did not happen. Responsive selling, open test drive up to push into 28.31, the naked VPOC, which is where the high was, consolidate and continue higher. That did not happen. So that's where we are, completely off. However, these are the scenarios that we plan for. It does not mean that there are no trades. We still have the market generated information in front of us, and the process is the same. So here we are. We open at 28.23 in a gap up from the prior day's close of about 12 points, 11 and a quarter points or so. and with a gap zone mid at about 1775, and the market is initially pushing straight up. The opening swing is 28.2250. Not sure why my opening swing is not on here. Every time my charts reset, these go back to where they were last saved. There we go. So the opening swing, very clear where buyers stepped in and where sellers stepped in. And then we then we rotate back down through the mid, through VWAP, pretty early on in the session still. But it looks to me like it is exhausted. Now, there are some things going on in the underlying products. Transports were a drag yesterday. And it looked to me like it was time for sellers to step in and start closing this gap zone here. Wrong. It pushes up, gets to the naked point of control from the 1st of February at 31.25, and that's the high of the day. Note that the high of the day is a weak high. It's a poor high. It's a poor high on the chart. It's a poor high on market profile as well. We have a double TPO high is what it's called. See that high here? 2 letters at the high. That's the traditional meaning or description of a weak high or poor high. 2 or more letters at the high. And so that leaves us with a poor high. First clear opportunity. Consolidates, and then we have this impulse down. Finally, we have the biggest rotation of the day, 9 points down, and boom, it sets us up for a mid-short, right? Mid-short, nice layoff here at the IB, comes back up, nice layoff again at the IB, threatens the short, but still stop is too far away yet, and then it continues, and that's the redemption trade of the day. And then we finally fill in the gap zone. We get right back down to the prior day's high, which is this green line. Remember, the prior day's session high or low are the green lines. We get to the prior day's high. We push a couple of ticks into the prior day's range. We never close we never touch the closing price of 11.75, and then we start to drift up back to mid. Okay, yesterday was a mix of intermediate and short time frame traders. Throughout the session, we see a lot of respect for day time frame levels yesterday. So that's where we stand. We accomplished a couple things, important things yesterday. First of all, we had really good volume, 1.13 million contracts traded. The mode of volume over a large number of days. Sample is 1.1 million, 1.09 to 1.1 million, and lately volume's been at 600,000, 680, 660,000 or something. So yesterday had some really good participation, and based on this 2-tick Renko chart, if I set it to the standard bar width, 5 pixels per bar, that's the standard I use, you can see that the chart goes off the screen. That's another indication. It's kind of a rule of thumb. It gives me an indication of how much movement there was in the session. So yesterday, a lot of scalping opportunities to win or lose, of course. Every opportunity to win is an opportunity to lose, potentially. And overall, a very orderly market. In my opinion, stock zones were well respected, and we held our day time frame levels. The other thing we did yesterday, we accomplished yesterday, is we closed the correction gap, the 2-2, the February 2nd correction gap, which was at 18.75 mid, ran up to 21 and down to 16.5, I think, or something like that. So that gap zone, which lived right here for the last 6 months, is gone. So that's what we've accomplished that's what we've accomplished so far. In the overnight session, we reopen, and it's very quiet. Fairly quiet session. We do have pretty good volume in the overnight session that exceeds the 110,000 common value for the overnight session. There's a fair amount of participation, but the range is only about 7.75 points since the reopen last night. Now my session runs pit open to pit close, and then I consider everything else as part of Globex, which is not how the exchange sees it. The exchange sees session starts at 6 o'clock Eastern, and it continues as that same session until 5 o'clock the next day. But I go pit open, pit closed, and then everything else is considered outside of pit. So for me, it's not just extended hours, it's just pit or no pit. Very balanced overnight profile, very Gaussian, and we are trading across the entire range. So here we've tested down, we've tested up, we've tested down, we're in the middle. Not much help, except to note that we are below yesterday's supposed value. Yesterday's value area, as you can see, has no consensus whatsoever. Very linear, very boxy graph, rectangular graph. There's no consensus. Consensus looks like this. So what this is telling us is that the participants on high volume tested the entire range pretty well. They trade a lot here, trade a lot there, trade a lot, 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 trade a lot. Okay, so a lot of price discovery yesterday, which is great opportunity for the day trader types. And so that brings us into what we're doing today for this session. A quick pause to check what we've accomplished here on our composite. Yesterday, again, we basically hit the naked point of control of this day right here. That's the 1st of February. So we hit the naked point of control of that day and fell off. We were unable, and I expected, unable to get the 35.75, this MC point of control or most accepted price in the next area up. So we fell short, and we busted through the gap that we left behind right here. That's the correction gap, and just held steady and closed higher than the gap. So we are still holding prices in this MC. So there's a magnet there. There's a potential magnet there. The gap zone high is 28.21, currently trading 28.1875. So we're in this gap zone. Traditionally, when we end up finishing in a gap zone, reopening in a gap zone, historically what we've done is we treat that as a low volume node, an LVN. And what happens is we end up filling over time. We end up filling that. It's almost like, I don't know what the explanation is for that, other than to say the market's accepted this price in the past. It's accepted this price in the current, right? Accepted this price in the past, this price in the past. And once it checks up, down, it basically just stays in the middle. Okay, it's in between two magnets, and it just tends to trade and auction in that low volume area in between. And that's really what I'm expecting for today. Expecting today to be, despite the high volume overnight, I'm expecting today to be a rest day. And it's likely to be stuck here between 28.1275. Remember that price, 28.1275 and 28.21 or 28.23 today. So that's what's most likely going to play out. But as traders, we respond. We're like soldiers. We respond to field conditions. and always put safety first, right? Risk first. So we mind our risk and take the opportunity when we can. Today, open auction in range. Most likely a pretty back and forth trade, and the expectation is that it's likely to drift down, push back up, consolidate, and test through the range, and just keep going sideways. I expect an inside day. Again, we have a weak high up top. The bottom is also somewhat weak. We don't have a very clean taper at the bottom. It may test through the bottom. I wouldn't mind seeing it down at 12.75 for an opportunity to push back in. But today my plan is to trade from the outside in. That's my plan. To trade from the outside in, which means that as it pushes boundaries. So let's redraw this. Let's exaggerate it. As we do our open auction and we drift down and we push through the low, I'm going to look for opportunities to get long, for it to move back. And as it exceeds and pushes through the high, right, and makes new highs on the session, I'll be looking for opportunities against my designated areas, which are these gray bands, these stock zones, to fade those moves outside of the range. That is scenario one. Okay. So I'm expecting mostly a balanced day. Now, if it doesn't give us a balanced day, no big deal. You still trade you still use your training, as they say to soldiers. You respond to the conditions in front of you, but it's good to have an overall scenario plan as to where things may head and what the conditions are, what the mood is, all that stuff. This is why we do this. We come in not to predict the future. We come in with the best information we have to understand the narrative and to take advantage of it when we can. My voice in the morning is always cracky. Secondary scenario is the opposite. Open auction that tests higher. Looking for some resistance at 27. In the 27 area, I expect it to traverse across, test down, and then also consolidate in the middle. So it's a question of, does it go up first? Does it go down first? I do not expect a trend. However, scenarios 3 and 4 cover trends. I won't draw those on here. I started late, and I'm exceeding the 15-minute limit anyway. I suggest you take a look. But overall, if it comes close to this weak high, then I'm looking for the weak high to be taken out. If the weak high gets taken out, what's it got behind it? It's got 35.75 MC point of control behind it. Another opportunity to fade and trade from the outside in. As Christian said, his worst trades are trades from the outside in, the ones that I'm talking about. And the reason, I'm guessing, is because you're trading from the outside in with a 2-tick stop, 6-tick stop, 5-tick stop, 7-tick stop, when the rotations are demanding much wider stops. I'm using 3-point stops at the moment, and I'm only trading in my zones. If you do not have zones, if you do not lay out a plan for where you're going to engage with the market, you just engage wherever, you're going to find that it just your results may be more random than they need to be. That's just my opinion, my experience with my own traders, and with the traders that I interact with these days. Anyway, I'll leave you with those thoughts. Good luck today. I'll catch you tomorrow. Take care.